Good day, fellow investors. A stock that has done terribly over the last few years is Vail Resorts, the ski resort stocks. Let's look at the business, the financial, the value, the quadrant, and whether it fits maybe your portfolio. If we look at the business, people are skiing with ups and downs depending on snow, but they have a global network of 42 owned and operated mountain resorts, 2 million pass holders. Well, no ski resorts of scale built in the last 40 years, so it's hard now to destroy a mountain and build a ski resort. So what is there, which is something interesting. Perhaps you have been skiing here, they have something in Switzerland, Australia, perhaps you've been there, but mostly US situated. So it will again depend on US and economy in general for investment purposes. But skiing has been, we can say, stable with some ups here, some downs here, but I think it will always be and remain cyclical. However, they hope to improve the situation by, let's say, cosmetics, by pushing the full capacity not just to the few days when it's peak school, holidays, snow or something, but also in other times. So skiing is volatile, but it has been profitable, the company has been growing. Now it is in a slowdown, perhaps recession, this or that. People are spending a little bit less on skiing, but therefore it is something to watch if and when things might turn. In the meantime, they are making money, but they have been growing over time. Depends on snowfall, of course. If there is less, then there is normally less visits, but they are investing, doing their own thing, paying a good dividend, making some share repurchases. So that is something. The cash flows have been strong over the years, and they are converting some of that cash and returning it to shareholders. There are some, of course, maintenance, some other spending for things like that, but in general, good returns to shareholders, also share repurchases. So when you look at the situation, the dividend yield is 5%, plus the buybacks, it gets you to something, especially if over time they keep on, let's say, growing a little bit through acquisitions. The debt ratio is significant, so there is debt because of the past acquisitions. However, those acquisitions also grow revenue, and if then they can scale that could be something. However, debt to EBITDA now is around 3, so that is on the scarier side, so they should work to lower EBITDA. The guidance, of course, it will depend on snow and everything. However, they will still make 200 million over the year, a little bit more from a cash perspective, and there is, of course, the low end, the high end of the guidance, still 800-900 million in EBITDA. Let's look at the intrinsic value. If I put in the dividend of $8, then if the dividend just grows at 2% per year, discount rate, I expect a 10% return, terminal multiple of on the dividend 5%, then we are there. So for 141 for the stock price. Just on that, expecting the dividend to grow a little bit over time, to be at a yield of 5% over time, and perhaps there will be 2 good years of snow and skiing and it will be trendy again, and then you can also maybe get a capital gain. But we are close to a 9% likely return from the stock. If we are more exuberant and they manage to grow the dividend 5% over the years, let's say that the market wants a 4% yield, then the stock goes higher, and that's the capital return. If they don't grow and the dividend yield goes to 7%, then there is still some downturn risk. But all in all, I think everything here will happen on risks, on recessions, on exuberance, and that's how it usually goes. So if I look at our investment quadrant, I've put it here. So 7-8% return, a little bit risky, but still, if you hold a group of this value long-term plays, you should do okay. For now, the key to watch is recession, trends, debt, of course, interest costs, snowfall, but you can't play on that. You have to accept that volatility, perhaps also as an opportunity. For my personal portfolio, I miss the growth. I like the moat, but I don't know how will skiing be affected in the next 10 years. The model portfolio, I would need it to be another 30-40% down to consider. And diversified, if it goes down 20%, I might consider it. Good yield, good business over time, should do well. So very interesting situation. So I'm putting it on the quadrant and therefore on our YouTube watch list, and then we'll see how it goes. To see my portfolios, check my research platform.